Welcome to the Rigatoni Capital Substack podcast. I am here with Bagholder on Substack, also known as Kevin. How you doing?
I'm outstanding, sir. Yourself?
Pretty good. We missed you. You were gone for a week or two.
Yep. Yeah, little vacation.
Nice.
But, glad to be back and got a lot to talk about today.
Yeah, you came back to some jittery markets, huh?
Yeah, definitely. You're seeing it in quite a few different places, and especially in the crypto markets. It's a literal bloodbath out there. There's no doubt about it.
Yeah, it sure is.
Sentiment is
I'm
completely wrecked.
yeah. It's good though because we don't care, right?
I don't care. I I'm in it for the long term, and as long as your view is long term. I don't think any of the bull market case for Bitcoin. Let's just start with Bitcoin. I don't think any of that's changed. It's still a permissionless network. It's still uncensorable. It's still governed by rules and not rulers. It's still finite and scarce, and you know, and we've got a lot of institutional involvement of late, and,
Yeah.
and so there's a lot to be positive about, and there's a lot to take away from that. So I really look at this as an opportunity to buy more.
I'm right there with you, and I've been actually like adding small amounts each day. So
Yeah, I have added a little bit more. I bought more Mister as well. That while Bitcoin's down, I don't know, 30% off its highs, I think Mister's probably down about 60%. So they're just about giving that away.
yeah, you can say that again. All right, let me go over just I'm gonna go over stocks and indexes, and then I'm gonna hand over the mic to you real quick.
Sure, let's do it.
Um, all right, so let's start with the indexes. So the VIX, Nvidia had a great earnings report last night, and the market just collapsed today at some point. I think it was in the morning. I think there were some headline risks that came out, no, some headlines that came out that were, um, maybe pointing to the Fed not cutting rates for sure in December again. And, just more Fed speak, I take that all with a grain of salt. And hey, I think they probably will hold now in December. So, we saw the VIX spike. The VIX was actually down below 20. It's at end of the day at 26. Um, the gold is staying flat. Looks like we're at 40.80 on gold. Um,
There's some
the
definite consolidation in this area.
10-year is definitely consolidating. We're exactly where we were this time last night at 4.11. The Dow has fell from highs like 3 days ago, now down to 45,000. We probably hit highs around 47,000. Silver is also consolidating at 45.78. Um, and the only really thing I really care about is the Nasdaq. But oh yeah, here's the Nasdaq, 22,000. I would say we're probably well below 5%. So we're probably in between, I would say 5 and 10%. We're almost in correction mode, but I think we have a little bit more till we can say it's a 10% correction. And that goes for the S&P, which ended the day here at 65.38.
Yeah, both of those last two, the S&P and the Nasdaq, they're trading below their 50-day. So if you follow those technicals, a lot of people don't like that.
Oh, I sure do. I
You
sure
know,
do.
it needs to show some bounce back here soon.
As long as yeah, as long as it's on the yearly. Yeah, yeah. I always look at the 50 and the 200 day, which is on here. Dutch Bros had a actually it was my best stock of the day. Finished up 1.29%. Looks like insurance stocks kind of, ended in the green, which doesn't matter because they've been beaten up real good. You have kind of like your value stocks. Berkshire was flat. Looks like Home Depot has not bounced after that. But I think they stopped falling because they were only down less than 1% today. So after their earnings,
Yeah, it looks
uh,
like that 330 level. If you look at the chart, it's found support there quite a few times, and it was resistance on the way back up in 2023 and 2024. So that
yep,
should serve as support this time. You should see a bounce off of that. Whether or not we do, who knows? But if you like to read charts, that's what the chart's saying.
yep, exactly. I see the financials, which pretty much is just only 10 large stocks and Berkshire's in it. So it's not much to say, but you can see the chart here. Um, Kind of trades with the Dow a little bit here, not very volatile. Emerging markets, ex China, ex Russia, probably ex Saudi Arabia, ex a lot of countries actually. This is the index I like, the Freedom 100. So this is not a market cap weighted index. It has a lot of like Polish, Chile, probably some other countries that I can't think of off the top of my head. They're ex-US as well. It's emerging. This stock has been on a tear, and that's because Taiwan Semi and Samsung are probably their largest holdings in the fund. But you can see they pulled back and they are kissing the 50-day here. Um, so I always like that. AppLovin is one of my favorite stocks, one of my largest holdings, getting beat up pretty well here. BlackRock is over $1,000 a share. The QQQ is the NASDAQ 100, as you know, probably close to, I, I would guess we're in an 8% drawdown today. Unfortunately, Amazon has pulled back, which doesn't make any sense to investors like myself. We know what happened with Nvidia. Palo Alto reported pretty good numbers. I wouldn't say they were like blowout numbers. That stock dumped. Um, Strategy is collapsing before our eyes. As you can see,
That's another
here's
one. If you look at it, it should find support right at that about 170 level, 175, where there was plenty of support there. And it was resistance in 2024 on the way up.
yeah,
Should
yeah.
provide some support on the way down. Same thing.
Yeah, I like strategy, and I know a lot of people don't that I listen to and respect. As you can see, I started a position here in August of 2024 when the market was crashing. So, I have a decent base. I'm still red because I bought more. I averaged more into this name, so I'm definitely in the red now. But I'm not touching this name. I'm happy with just Bitcoin right now, adding it. Look at Palantir. Finally, we're getting close to maybe hitting the 200 day. I think that is so healthy for a name like Palantir.
Yeah.
And, Oracle, obviously, everybody thinks that's the center of the AI bubble. I'm not sure I fully agree with that. I think Oracle is a great company, regardless of the
I think they are
debt
a good company, but I think they're struggling right now because if you look at their balance sheet, they have a lot of debt. And
funds.
right. And the question is, how are they going to pay it off? And where's it going to come from? And or not even pay it off, but I mean, just keep it at a manageable level. And when you start looking at like how much they earn in a year compared to, what interest rates would be on their debt, what a normal interest rate would be on their debt, uh, um, I mean, you're talking 50, 60% of what they make just to cover the interest on their debt. That's it's hard to survive at those levels. And I think that's why there's been some pullback in it, even
Yeah.
though I think it's a good company, and even though I think that they're going to continue to make a ton of money going forward.
Yeah. I mean, through the year 2029, they're not going to make a net income and their free cash flow is going to be well in the red. Assuming they will, continue this plan, this program, or this deal that they struck with OpenAI.
Right.
Walmart must have had a good day, but I can't tell you why. I know that Target reported. I know a lot of these retail chains are reporting this week, so maybe they report it and I'm not aware of something. Um, Okay, and then we'll look at the bad names. Let's see here. Yeah, the nuclear names still getting crushed. All the speculative, non-profitable names. Uh, even MP Materials, which I don't own. I'm waiting for like the discount of the year before I buy this one, but I do like it. I think Mercado Libre is a great business as well, great growth company, and this is obviously falling off a cliff. And the last thing I wanted to add was this company here, which is Bloom Energy Corporation. I think they're kind of also the center of the sell-off because look at this chart. I mean,
Yeah,
it's
it's
pretty incredible,
well, yeah. When you see charts that go parabolic like that up, they tend to go parabolic down as well.
Yeah,
So you got to be real
exactly.
careful with that one. Even though I'm very bullish energy, I don't own this name, but going forward, I don't see anything wrong with at least that sector and that industry. Energy is the one thing that ties everything together, ties AI together, and everybody needs it. Everybody needs it, and so there's going to be demand for it, and there are definitely going to be some winners in that area.
For
No
sure.
doubt about it.
Yeah. Well, what would you like to speak about first? And hey, if I think that maybe there's something I can share on the screen, I'll just pop it up when you're talking.
Yeah, do it. I guess a good place to start, maybe with the recent news with the Nvidia earnings from yesterday. And I know you're an Nvidia bull, and I personally don't have a position one way or the other. But if you were to put a gun to my head and force me to choose, I would probably be on the short side.
Okay.
Um, and the reason I say that is you look at the market cap of that stock, which is about $5 trillion roughly. Let's just say 5 trillion. If you were to, you know, stick $5 trillion into treasuries right now or something like that, risk free, you would get 200 and 250 million in earnings somewhere in that range. And Nvidia is not producing anywhere near that. Now, having said that, their numbers are fantastic. Their revenue's growing, their margins are great. There's a lot to like about that report. But my question is, and I have several, and I'm wondering if any of these worry you at all. Um, let's start with number one. The receivables continue to go up. In fact, they've more than doubled in the last year, and that part of it is if you're going to play, you know, let me put it this way: any accountant worth their salt will tell you that when receivables start rising, there a lot of times there's problems there. And that's one of the, I don't know if you want to call it a smoke alarm, or that's one of the things to look at. And it's a little bit troublesome to me how quickly their receivables are going up. Their inventory is rising too, which is interesting in that if they have such a hot product and their chips are in such demand, okay, how is it that their inventory is building? How do you reconcile that? Okay. Um, Another thing is, and I looked at a breakdown of their revenues, and basically about 60% of their revenues come from four customers. And you'd have to assume those four customers, because it doesn't say who they are, but you have to assume that, they're the Microsofts or the Googles or the big boys that are spending 60, 80, 100 billion a year on capex. Number one, can they continue to spend much more than that? And what happens when they pull back and spend half that or something like that? What happens to Nvidia's revenues at that point? So, accountants would call that an ongoing concern where you get the bulk of your revenue from just a handful of customers. And I think that's a problem. Like I said, as well as the receivables, as well as the inventory rising. The other thing that's interesting to me is that their operating cash flow is actually below their net income. That's not a very normal thing. If you look at the other companies in their industry, Taiwan Semi or AMD or something like that, uh, or any healthy company for that matter. For instance, Tesla last quarter, their operating cash flow was 4x their net income. Okay, that's a sign of a healthy company. when Nvidia's operating cash flow is smaller than their net income, and I think it's like 72, 74%, right in that general range. It's it makes you wonder from an accountant looking at that would, make it make sense, I guess, is what I'm saying. I know you're a bull, and I know you like Nvidia as a company, and there's no disputing the numbers they're putting up and the sales and the margins and all of that. But make some of those things make sense to me, because I struggle. I struggle from an accounting standpoint, uh, to have those questions answered. Does any of that worry you? I guess is my question.
Um, yeah, some of it might, but I'm not really sure. My concern is more on the side of being in a cyclical hardware business, and if that breaks, then everything breaks.
Right?
If we are not going to see the hyperscalers continue to purchase the infrastructure needed, then that's an issue. Then that obviously is an issue. But I think this company um, can foresee. I think Jensen can foresee the next 4 years in terms of the cyclical GPU transformation. So
Mhm.
it brings me to like 2029 at least. I would maybe push it and say 2030. And if the capex is what we expect it, what he expects it to be, then I think that the company is fairly valued today. Now, when that ends, then what do you do? It's not you. There's not going to be a bell that rings and says, "Hey, the cyclical hardware story is ending now." So there is no bell, and that's where CUDA, their software, is so important because if you can only train the GPU on a Nvidia CUDA software, that really kind of makes them like a monopoly.
Hmm.
It's CUDA software doesn't cost any money. There's no recurring revenue. It's not a SaaS, so there's not a charge that they have to pay, that Google has to pay Nvidia to use CUDA every single month or year. So it's practically a free software. Nvidia does that because you're not going to want to switch to a different software to train your GPUs.
Right,
So
right.
they are locking in, like when they strike these deals that look, kind of bubbly. Really, in my opinion, they're locking them into the hardware, and that's through CUDA as well. So that's my bull case on them. Some of the inventories, some of the what was the other one you said? They're
Receivables?
operating. Yeah, the receivables. I mean, I would want to go back. I would want to listen to the earnings call, make sure I didn't miss anything. I mean, I can pull up the transcript and even AI that stuff.
Hmm.
So that's probably what I would want to do in that situation. Yeah, it wasn't 100% like a perfect earnings call in that regards because those numbers spiked. I mean,
Yeah,
they
I'll give you
absolutely
another one
spiked.
too that's somewhat interesting to me. We talked in our last podcast on how they are, leasing some of their chips, okay? And companies that have super in demand or highly in demand products don't normally lease them, right? So we discussed that before. Here's another thing that's interesting from this earnings call. They have what's called accountants have what's called like a DSO, which is the days of sale of sales outstanding. In other words, how long it takes from the time you book a sale to actually get paid. Okay, you would expect that when you have a hot product, you could say, "Pay me now, and I'll send you the product." Okay, that's kind of how the system works. But instead, when you look at their time to get paid is up to, I think it's 53 days now. So they book a sale and they're not collecting the money for 53 days on average.
Okay.
Okay. Now, it might not seem like a big deal, but a year ago that number was in the 40s. 2 years ago it was in the 30s. So it's taking longer and longer to get paid for a product that we're being told is super in demand. Okay. And if it's the four biggest customers have 60% of their business, you're talking about big companies. What is taking them so long to pay the money?
Oh,
Okay.
they're making interest on their
Maybe,
free cash flow. They're buying treasuries.
maybe, but at the end of the day, they owe money. And, why is it taking so long to get paid? I mean, they're at 53 days and climbing now. And if you look back historically at like the bubble in 2000, there were several companies that were like that. They were booking revenues and taking forever to get paid. And I think Nextel was one, or I think WorldCom was one, and Lucent Technology. There's a good one. Remember Lucent in the 90s? That thing like 100x'd in the 90s, right? It went
Hmm.
absolutely bananas. And then all of a sudden, their DSO went from 15 to 30 to 45 to 65, and the next thing you know, the stock is at zero. Okay. There
Yep.
comes a point where when you have a bill outstanding and it doesn't get paid in 60 days, you have to question whether it's ever going to get paid at all. And if that's the case, then there's a decent chance that um, that that Nvidia is not going to get paid on some of these receivables. And if that happens, and we'll find that out in the next 90 days or so, I mean, if they come out and write off 5 billion or 10 billion or 20 billion of receivables, the stock's going to get smoked. And what I think is interesting, and I'll tell you who else thinks like this, is Michael Burry. I don't know if you've read the news on him lately, but he's taken a huge position in Nvidia 140 puts for March. He's betting millions on this.
You don't think he's sold already?
I don't think so, not to my knowledge. If he has, that's news to me. Um, but I do know that he took a big position in the 140 puts in Nvidia for March, and maybe I unless he sold them in the last couple of days, I'm not aware of it. I don't know. I'm just telling you what I've seen from the news. Now, his argument with this is that a lot of these tech companies are extending their depreciation schedules. So, in other words, they buy the latest, fanciest chip today and they depreciate it over 6 years. Okay. Normally, it should be depreciated over the time period in which it's going to be functional or usable. You know, so the question is, how long are these chips usable? What are they getting out of them? And if the average is 3 to 4 years, they should be writing it off in 3 to 4 years. And a lot of the tech companies are extending that depreciation schedule, which means that they're going to be paying for chips on their if you look at their financials, they're going to be paying in 6 years for stuff they're not even using anymore. Okay, that becomes an accounting nightmare. And that's what prompted, or at least that's what Burry gave as the explanation for putting a short position on some of these companies, including Nvidia. And you look at Nvidia's depreciation schedule, it's even scarier. I mean, they're depreciating 6% or 7%, which puts them at 16 years to depreciate stuff. There's no things that they have that they're taking 16 years to depreciate. It just doesn't make sense.
Hmm.
So, that's another thing that scares me. Um, the depreciation schedules of these tech companies, the days to get paid. Um, I'll give you another interesting one that it really doesn't have to do with Nvidia, but it's typical of what I'm seeing. And that's AMD gave OpenAI the right to buy, and I forget the amount. It's in the billions though. A right to buy, I think, a 10% ownership stake in their company. And they gave them the right to buy their stock at 1 cent, contingent upon them as they buy the stock and sell it in the market, that they use that money to then turn around and buy back chips from AMD. So I'm trying to figure out exactly how that's a money making proposition for either one of those companies. I kind of get it for OpenAI. They're going to get chips for nothing, but why is AMD doing that? Because
Sure.
AMD, like Nvidia, they've got the latest, hottest chips and they're supposedly in demand. Why are they using these forms of creative financing to do these deals.
Yeah. No, I
You
I
know,
would be
and
nervous if I were named AMD investor. I don't own the
right,
stock.
right. And
Um,
what's funny is the AMD stock didn't even move on the news. They're being diluted for 10%, and the
yeah.
stock didn't even budge.
Well, yeah.
You know, and
Um,
I see things like that, and it's just it scares me, and it's keeping me away from that sector, even though I know AI is the future.
sure. Yeah, and I think that's okay. I don't know if I've made myself clear, even though I am bullish long term Nvidia, I am not bullish in the short term necessarily. I own the stock at like 450 a share,
Right?
$4.50 a share. I took profits last year. I probably trimmed off like 20% of the position I had.
Yeah.
So, I'm still paying the taxes on that as we speak. But, my writing at Rigatoni Capital Substack is not, I'm not saying today is a buy, and I haven't said it has been a buy except for I thought the NASDAQ 100 was a buy in April. I thought Amazon was a buy in early April. But it was really, and I thought Meta was a buy in early April, but it was really only like a few days that I thought it was a buy. I don't personally, I think it's a crowded space. So the only thing I think is a good investment today is Bitcoin. And that's kind of what
Right.
I write
It,
about every day.
it's on
So.
sale. There's no doubt about it. And I don't think the bull case has changed at all on Bitcoin. And so guess what? It's on sale. And if that's what the market is offering us today, then that's what I think we got to be buying.
Yeah, it's kind of like risk management. I like the word portfolio management. I don't need to own more AI stocks. I don't need to own more tech. It's already too large of a position for me, you know?
Right. I get it. I get
As
it.
much as I love the NASDAQ 100, I'm not buying more today. It's 5% down, you know? Um, so yeah, and look, this thing could blow up, and I think you would agree that there'll be some winners, and there might be more losers in terms of quantity of individual businesses. I mean, that's quite possible. So
Yeah. So, I'm curious what your thoughts are on, very related to this, but having to do with OpenAI and how they've made spending commitments for north of $1 trillion over the next decade. And they have, from what I've heard, 12 billion in revenue, in basically 12 billion a year in revenue for
now it's
subscriptions
20.
to,
Oh no, it's
is it
20.
20?
Remember, he
Okay,
got
okay, okay. So
defensive.
it's 20.
Oh, we had more than 12 during his interview with
Right,
Brad.
right. So, how does that even begin to make sense?
Absolutely does not make sense. And, I really don't like Sam Altman. And that's just a personal thing. I'm very suspicious of him. But
When he was asked that question, he was very short with the guy that asked him
yeah,
and
I,
gave a very curt response. And
yeah.
it's not the response you would expect from a CEO. I mean, a CEO should be able to explain in simple terms the business model and what the plan is going forward. And he didn't seem to want to do any of that.
Well,
And
personally, yeah, go ahead.
and the thing is, this OpenAI, they're in the middle of all of this. I mean, they're in bed with
Microsoft,
Microsoft and
Nvidia,
Nvidia, right?
Oracle.
It's part of the whole chain. So if there's a problem there, theoretically there should be a problem in the other places too.
Yeah, absolutely. Yeah, and my concern on OpenAI is I think Anthropic and Perplexity and Google's Gemini, I think they're all like better. They do a better job than OpenAI
Right.
does or
I had to go to
ChatGPT
my
does.
son and ask him that, and he says he doesn't even use ChatGPT anymore. It's all the other ones.
Yeah.
So,
I
you
mean,
know,
certainly if you're a coder, you don't really use OpenAI.
nope,
Um,
nope.
so yeah.
And the question is too, I mean, who's really going to be the winner in that area? And even if it's OpenAI and they're selling subscriptions to it, I suppose, what is that worth? Is that even worth $1 trillion over 10 years? I,
No,
I struggle to see that make sense, even if they were the winner and they got, 60% of the market. Okay, because
no,
that's about what the winner is going to end up with.
they said that their Sora, the AI video that was
Hmm.
number one on the app for like a week, they said like, oh yeah, we can just put something out like that, and we're going to add to our portfolio. We can do something like this. That was kind of his pushback. I 100% agree. I think the industry needs another ChatGPT moment for this to keep going. And I personally think, I'm an optimist. I think we're going to get it. I don't know what it's going to be. I don't think I'm not smart enough to know what that ChatGPT moment is.
Yeah.
Jordy Visser thinks it might be getting to the point where, we have discovered not a cure for cancer, but it becoming like a chronic disease, and
Yeah,
that's
something that you can live with and maintain rather than have it kill you.
yeah,
I
yeah.
I
So,
I do believe there's some drugs that are going into clinical trials in the next quarter or so that were created just by AI, as opposed to, people in lab coats in a laboratory somewhere, mixing things together. Right? AI is actually generating drugs that are showing promise in these areas. And I do think that's a very real world application. And hopefully that continues. And I think that's right around the corner. I do.
yeah, AI itself as a technology, the fundamentals of AI, if you think about it, not like sci-fi related, but if you think about AI as a technology, it is technically could be like an exponential type of technology. That's like the whole point of AI, is
Sure.
that, it's going to look like a compounding S&P chart,
Yeah. An S curve. Yeah.
an S curve.
Right. So yeah, I agree. Big picture, long term, AI is here to stay, and it's going to grow. But I struggle to see how these companies are going to generate income from it.
Hmm.
And I had a back and forth with your buddy Quote the Raven there on a couple of comments we went back and forth on, and he thinks I'm absolutely nuts because I can't find the income streams. And he's like, well, Microsoft and Meta and these companies, they know what they're doing, spending all that money. And maybe they do, maybe they don't, but why can't they at least say this is what we're going to do with it? Tesla has told you what they're going to do. And when you look at it, a company like Tesla, here's the bet. Either they've solved autonomous driving and that company's grossly underpriced, or they haven't solved it or won't solve it and it's grossly overpriced. And when you look at Tesla, that's the bet. Okay, I get it. And whatever side you come down on, you come down on. So look at something like OpenAI, or look at Microsoft, or look at what these companies are pouring money into. I don't see the bet. What is the bet? And that's another one. I need somebody to make it make sense to me. And I haven't seen anybody that can do it in an articulate way yet. I do like Jordy Visser, and I do follow him regular. I see him on Pop all the time, and I've read his articles. I've read his Substack for as long as he's had it out there, and he does make a lot of sense. You can see he's a natural-born optimist, and you can also see that he's experienced from a market standpoint. So some of this stuff he's seen before, and I think he's relying on that experience and his optimism to color his opinion in these areas. And again, I like a lot of what he has to say, and I do believe he's right about a lot. But I still struggle to see the income streams. Do you see any off the top of your head? I mean, other than the subscription for the, Chat
Well, you see,
GPT or
you see
these?
the subscriptions, but I think when you see like 20% year over year in revenues, and margin expansion, profit margin expansion, I think that is just what you call productivity boost. So, um, I think the productivity boost is more for the margin expanding because you're laying off people for one, and you have
Right.
actual AI agent bots. Doing things very fast for you. In terms of revenue, yeah, a lot of that is subscriptions. You're right about that. And, and new products. There is a demand for new products, and I'm sure
There is.
Carp at Palantir would tell you that. I mean, the demand is insane, right? Um,
For what
so
he's doing, yes.
for what his software is doing, yeah, exactly. So if these other large hyperscalers have this kind of AI demand, that I don't know. But one thing, the most interesting thing you said there was that Chris Irons is bullish on this whole idea that AI is going to produce revenue. I thought he's a bear. He's the
Well,
biggest
I'm not
doom and
saying
gloom
he's
guy I know.
bullish. What I'm saying is that he stepped into me a little bit about the fact that, you know, all this capex spending that these companies that the hyperscalers are doing, okay, he's firmly of the opinion that they know what they're doing with that money
Yeah,
and they
like
know what
why
they're getting
question
into
mark
and they see
Zuckerberg?
the income streams, okay? So that's what he's saying. And I'm saying I don't see them. What are they?
Yeah,
Okay.
look, Mark Zuckerberg was wrong before. Look at what, Reality Labs. They make
Right.
mistakes.
Right.
They make
They do
mistakes.
make mistakes. They do make mistakes. But I can't even figure out what the bet is. And that's the problem. Like I said, with Tesla, you know what the bet is. With this, I don't know. I just and I don't see it. And none of them are forthcoming.
Completely
Microsoft's
agree
not
with you.
forthcoming. OpenAI's not forthcoming. Nvidia's not, and none of them are forthcoming.
I
So
agree with you. Now, Meta, Mark, Hope, this is a great example. Hope is not a good investment, right? Strategy.
it's
Hope
not a
is
strat.
not
It's not a long-term strategy. No.
Hope is not a long-term strategy. Mark admitted that a lot of his CapEx spend on GPUs and data centers is based on hope. He actually literally said that. And, his idea, and I'm going to put it in my words because I'm a regular Joe, is that you
Mhm.
throw this many GPUs together and you build that many GPUs on top of each other that you may have an opportunity to strike gold and find super intelligence. And whoever finds super intelligence owns the world. And there are many, many experts in AI and computer engineering that say actually superintelligence may never be possible. It's just not possible. I'm talking to the point where the robot or the AI actually has a thought process
It
on its
is
own.
self-aware.
Yeah, self-aware. So that's his idea, and he's like, "Hey, if I'm wrong, I'm wrong, but like this is a good opportunity. This is once in a lifetime opportunity. I'm gonna spend, and let's say maybe I'm off 250 to 500 billion dollars. Oh well, I'll take the hit."
Right? I kind of get that. So in other words, they're doing the work without a destination in mind. That's a little scary to me.
Yeah, I would
Um,
think.
eh, but you know what? The guy didn't get where he's got by not taking risk either. So I mean, you have
Absolutely.
to think about it in those terms, and they're all the same. The CEOs for all those companies, they all manage risk like you wouldn't believe. They're experts at it, and that's why they're sitting where they're sitting. So maybe you give them the benefit of the doubt, but I'd like to see it. And the thing that you mentioned before about Jordy Visser and the drugs, that's the one area that I've actually seen it. If you look at I think it's Eli Lilly has a drug that they're bringing to market, or not that they're bringing to market, that's going into clinical trials very shortly. And that's a stock that had always been at a 10 to 12 PE, and it's gone bananas lately. Why? Because I think a lot of people have some faith that that drug's going to do well. And if that's the case, and AI can do that, well, then guess what? Merck is going to see a benefit, and any of these other drug companies that embrace AI, there I kind of see a money stream. I get it
Now,
if that's the case. But we'll find out soon enough because, like I said, it's going to clinical trials, and we'll have to see how it does. But I can certainly say it's been reflected in the stock price of Eli Lilly as compared to Merck, both companies that I follow. Merck is finally starting to catch a little bit of a bid, but not like Eli Lilly has seen in the last 6 months.
yeah, Eli Lilly's insane. I have a friend that works there. He's happy.
Yeah.
Um, no, and another last thing about Meta, they would argue that they're seeing, the recommendation AI economy. So a lot of their GPUs, their programming goes towards recommendations for advertising. And it's kind of similar to what AppLovin does on their
Right?
platform.
Right?
So when you see 20% year over year revenue, and then maybe you break it down and you see advertising revenue increase, Mark is claiming that is due to AI. They are becoming more efficient and for advertising. So, I mean, that's what
Oh,
they would argue, and that's today's case. Nobody cares about today. We want to know what's the 500 billion going to get you in 5 years from now, right? How are you going to get
right.
that money back? Yeah.
But at the end of the day, I mean, they look at it and they see it as advertising. And that's basically Google's whole business model. They gave away a search engine that they give away to everybody for free, but the advertisers and the people that want to pay to get on the top of those lists, that's where all their money's coming from. They're really nothing more than an advertising company. Same thing with Facebook. They're an advertising company. I mean, how do they make money? They make money by people paying to get in front of your eyeballs, right? They give away their product. They give away Facebook, they give away Instagram, they give away Google. All those things are given away to the public for free in exchange for corporations paying them to put their name in front of those eyeballs. So it's like a giant form of, it's like the yellow pages from the old days. It's exactly what it is. Okay. My question is, how big is the advertising market? I mean, what is that worldwide? How much was spent on advertising last year? 200 billion maybe? Maybe a little more? Let's assume that one of these comes along and takes a 60% market share or something like that. That's still only 120 billion a year, 130 billion a year, something like that. Throw in some inflation, maybe it's 150. I just don't see how it gets into the trillions. That's the part that's killing me. And it's got to be someplace other than advertising, which is what we see today. And I'm hoping that maybe the drug companies will show us a way. Maybe that's part of the answer.
Well, didn't you know we're all going to be wearing Meta Ray-Bans in the next year, and we're going to be like
Yeah,
AI robots?
I don't see any of that happening, I'm afraid. I don't get it. But you got to give the guy kudos for trying, you know. So there's that. But so anyway, those are my big issues for today. Still trying to find the income streams for these AI companies. Still trying to find how any of that makes sense. I'd still like somebody to explain to me how the accounting over at Nvidia makes sense, and not just Nvidia, the rest of them do. AMD, even crazier to me. I do have some friends that are along AMD, and I see stories like that, and I just cringe because it reminds me so much of 1999. It's the same things. Now, there are some differences between now and 99. We've discussed them before. There are companies with actual revenues that are growing them at crazy, crazy percentages. And a lot of that was non-existent in 99. But do the market caps justify that? I don't know. I can't, I have trouble understanding a $5 trillion market cap in Nvidia. I have trouble understanding a 3 trillion market cap in Microsoft. Even though that company is everywhere, I just, it's tough to justify tying up that amount of capital for what they actually produce. And on top of that, they're spending, I don't know, 90 billion in capex this year. Am I right about that? I think it is. Spending around
Mhm.
90 billion. So
Um,
they're trying to secure future revenues and they're trying to, you know, get a wrap on this AI thing. But I wish I could have somebody explain it to me in a way that makes sense.
well, I tried my best, and I
I
probably didn't.
know, I
I
know. I
probably
give
didn't
you
do a
credit
great
for it.
job. Like I'm looking at. Well, I got a question for you. But I got two questions for you. How about
Sure.
Apple? Can you see how that market cap makes sense?
Uh, you know, here's what I see for Apple. And I've been an Apple guy for a long time. I've had Apple iPhones. I'm looking at you on an iMac right now. I haven't. I My iPad goes with me everywhere. I mean, I'm an Apple guy. I get it. But they've been able to create their own ecosystem that basically keeps people locked into it. But there comes a point where, I mean, they want $1,700 for a new phone. And tell me what the iPhone 17 does that a $200 phone from Samsung doesn't. I would argue the Samsung's, from a camera standpoint and a couple other standpoints, a better product, right? In the meantime, they're charging their customers that have been loyal to them $1,700 a pop to go get their latest phone. And at some point, that's got to break. Now, you know who else agrees with me? Is Warren Buffett. He's been selling it hand over fist for years now.
Yeah.
And I saw something else that's really interesting about Buffett. Did you know that Berkshire Hathaway has been a net seller of stocks for 12 straight quarters now?
Yeah.
Three
I mean,
straight years.
I don't know if it's, yeah, I'm not surprised to hear that. Sure.
12 straight quarters. Now, what was that guy doing in 98 and 99 when everybody else was killing it on the parabolic rise in tech stocks? He started raising cash in late 97, all through 98, all through 99. And there's Jim Cramer getting on the television saying, maybe it's time for Buffett to retire. This is back in 99. He just doesn't get it, right? And what was the guy doing? He was raising cash because he knew that the tech bubble or the internet but wasn't going to last forever. And when it finally did pop, he wanted to go pick up some of the better companies for pennies on the dollar. One of those being Apple. I mean, he started taking a position in Apple in what, oh 04, oh 05, oh 06, right in that general range, because he was sitting on wads of cash. And here he is doing the same thing again. And, that guy's arguably the GOAT. It's
Absolutely.
it's
Yeah.
hard to argue with his track record.
Yeah.
And
I think
if that guy is selling, maybe you got to start looking around at things to sell and things to lighten up and ways to start raising cash.
I don't disagree with you. I think that he really likes a 4% 6-month treasury. While the market does what it does. And while Apple
Well,
does what it does, and while there's frothiness,
because
unless you're
a,
telling me,
a 4% return on his billions, right, is better than the 1.5% that Nvidia is getting on their trillions. In terms of
yeah,
percentages, it's a better return. And I'm not just picking on Nvidia, it's all of them. Okay. Um, but it's just, and you look at the return, the ROI on Apple, it's like 2%.
yeah.
I mean, it doesn't show me any one of those companies where it makes sense. And it just doesn't. And 4% on a treasury with no risk, and you can go sit on the beach and sip a Mai Tai or whatever with without even thinking, that starts to look appealing as opposed to buying Apple or Nvidia or any of these other companies at, I don't know, 70x earnings or whatever they are these days. I have no idea. I think Apple's 40 or whatever. But whatever, those are crazy multiples to be paying.
I would be disappointed if Berkshire wasn't doing this because I own Berkshire and I want them to buy 6-month treasuries. I would be concerned if they weren't,
Right.
and
And
they
I'm sure
were.
that's what they're doing. And I'm sure that they're earning their 4% and happy with that. But I have to question if that 4% even covers the money printing and inflation. Is he
Well, that's another
is
story,
he
you
losing
know.
purchasing power? I don't know.
Yeah, absolutely. Yeah.
But
I mean, I don't believe in the CPI.
no,
I
I
think
think
that
it's high.
CPI is higher. Yeah.
I agree. I think it's much higher. I just got my health insurance bill for the new year. I mean, it's 50% increase in
But
one
there,
year. It's nuts.
yeah. See, for them, that there's value in having that cash stockpile, especially right now when the
Right.
market's dipping. So there's a lot of value there, and they pride themselves off of paying taxes to the U.S. government. I mean, it's kind of like they're proud of that, you
Yeah,
know?
he's one of a kind that way.
Yeah, he's like yeah, they're like Tether, you know? They want to
Yeah.
buy treasuries. Um Oh, my question was on Tesla. So we talked about the energy storage
Sure.
aspect of it and why that's bullish and why we like that, and I agree with you. And you had mentioned like I kind of see what Tesla's doing with AI, and they have a path forward. Can you just tell me like your case on that without putting you on the spot? Like, what do you see? What makes you bullish on Tesla? We know the energy storage part of it. What's the other part of it, in your
So
opinion?
the other part is would have to center around the asymmetry that's available in that company that's hard to find other places. So you put $1 of investment into a company and it goes to zero, you lose $1, right? But if they capture a huge market or become a leader in a given market, that dollar could become worth 20 or 40 or 60, right? That's called asymmetry. And Tesla's chasing asymmetry in a couple of different markets, robotics being one of them. Okay. Um, you look at all the Elon's new pay package, and it's all based off milestones, right? And a lot of those milestones are building 1 million Optimus bots and building 5 million Optimus bots and building 10 million. Okay. If they're putting 10 million of those things out on the market and the market's eating them up, right? What is that going to do? Or what kind of money are they going to make off of that? It's going to be scary if it gets to the point where they're pumping out 10 million of those things a year. I mean, they're going to be forget 5 trillion that Nvidia's at. They're going to be a 20 trillion dollar company because what they're chasing is the labor market. And the labor market is arguably the biggest market on the planet. I mean, it's the one thing that the haves are getting, or that the have-nots, I should say, that the have-nots own that the haves don't. They need people to, to serve them their burgers, and then they need people to run their errands, and they need people to do, all those people end up getting replaced by robots. Man, that is a ridiculously large market. Now, am I saying he's going to be able to do that even in the next decade? I don't know. That's another thing that remains to be seen. He seems confident he can do it. And when he got his last pay package, the one that they're arguing with in a Delaware court right now, back in 2018 or whatever it was, that was a milestone package. And people at the time said, no way he's going to meet all those milestones. And he did. Okay. And I would argue again that they're not putting forth this pay package if he didn't think that he could meet those milestones. Okay. Now, that's just on the bots. There's also the question of autonomy and self-driving. If he has that solved, okay, and he can mass produce cars on the at the drop of a hat. I saw somewhere the other day that he's spitting out one car every 35 seconds in his factories. He thinks he can get that down to one every 5 seconds. Okay. So if the time comes and autonomy is solved, and there is a point at which he could be putting out a car every 5 seconds that can go out into the world and start driving people around, you start looking at the numbers and it makes financial sense to not even own a car. The Waymos and Ubers, they're $2 a mile, something like that. I own a vehicle. I look at the math and what it costs to own that vehicle and to maintain it and to put gas in it and to, in everything, everything, everything. And it's dollar and a quarter a mile. It just is. And it's probably more expensive even in some places. I live in a relatively big city where it should help keep the prices down. It's $1.25 a mile. Elon thinks he's going to have these things out on the road for 40, 50, 60 cents. And if that's the case, he's going to have the whole market in no time. How big is that market? I don't know. I think it eats Uber and Waymo just to begin with. And on top of that, it's going to start eating into, people that like there's two people living in our household, we have two cars. Do we really need two cars? I think a lot of people are going to start questioning that when they get their insurance bills that are going up, 50%. And they get, it starts to make sense from a numbers standpoint, okay, to not own a car. If what Elon is saying, and he's got autonomy solved. Now, have you driven in the latest version of Tesla? Have you driven in any of these cars, ridden in
No.
these autonomous cars? I just took a Waymo just yesterday. Okay. They drive safer than most human beings I know.
Was it in Phoenix?
Yes. Was in Scottsdale. Uh, as a matter of fact, it was taking one of our cars in to drop it off for the maintenance. And I took a Waymo back. And I'm telling you, these things they drive as safe as any human being. And whoever solves it is is going to get a huge piece of the car market. Because guess what? Ford and all the other companies, Toyota and Honda and all these other companies are going to have to go to them to get their tech. Now, I think Waymo has it solved, and I think Elon has it solved. The difference is Elon's is way cheaper. It's like a quarter of the price, and he can start mass producing tomorrow. That's the one thing Google can't do. They've got 2,500 cars on the road. They're expecting by the end of 2026 for that number to be 5,000. So they're not going to be able to scale, right? Tesla can scale. So you start looking at the asymmetry of that, and it starts to become really appealing because that market, the auto market, it's huge, and the autonomy market is even bigger. Look at it from I just drove back and forth to Vegas for my brother-in-law's 60th birthday the other day. And you know what you see on the road? Semi after semi after semi after semi, right? That's all you see on the interstates. And guess what? If they're able to do that in an autonomous manner, no more paying Teamsters $60 an hour to drive a truck 8 hours a day because that's all they're legally allowed to do. All of a sudden, it's done by machine and it can drive 23 hours a day and charge for one. You know what I'm saying? And how big is the trucking market? It's massive. So they get the autonomy figured out, they're going to get a huge slice of that, a huge slice of the personal auto market, a huge slice of the rideshare market. And so that's the whole bet with Tesla. Do they have that figured out or do they not? I think they do. I do, and that's where my money is. I have investments in Tesla, and I believe in them. Now, whether or not that comes to fruition, I could be wrong, and maybe some other company gets there first, and maybe Google figures out how to scale those things. I don't know, and or maybe Amazon, or maybe one of the other big boys. Who knows? Maybe somebody else gets there and Tesla doesn't. But I don't see it on the horizon. I don't. And if you've ridden in any of these cars that will drive you around, I'm telling you, they're safer than human beings. And one of the things that I would argue, Elon recently put a tweet out that said that they now have 6 billion miles under their belt, autonomous driving. Tesla's 6 billion miles, right? Human beings that drive 6 billion miles should have 85 fatalities. Tesla's had two. That's a 40x multiple safer. If you look at it in terms of accidents, they're 10x safer. So, in what world does that not become the standard over the next decade? Are we going to continue to allow people to drive cars around when we have ways to do it that is 10x better and 40x better? I don't see it. You have to go with the cheaper, better, faster, and that's what Tesla offers. And the energy that we talked about, that's just gravy. That
Yeah.
that's just gravy. But that's part of why I'm so bullish on Tesla as a company. They're going after huge markets. Maybe they get one, maybe they get two, maybe they get all three. I don't know. But if they get even one, it's a 10 bagger from here.
Yeah.
So that's my bull case.
That's great. Thank you so much. So let's wrap it up, but let's end on a very important note. What are your last thoughts on gold?
I
What are
think
your
that
thoughts
gold
on
is going
gold?
to continue to consolidate in this area. I think staying in the 4,000 to 4,400 area. Maybe it washes out some of the latecomers and drops down to low 3,000s. That's very possible. but long term, it's going a lot higher. Okay. And I'll tell you what's even better than gold is silver. If you look at that chart for silver and you look at the last article I wrote on silver, it is that thing is a coiled spring ready to go. It just is. The volume is there. The technicals are there. The macro is there. The history is there. I mean, everything is screaming higher prices ahead, and it is so grossly underpriced relative to everything else. You know, it's trading at, what did you say, 46 today? I think it's actually higher than that, but let's just say it's at 46. It was trading at 50 in 1980. Can you name anything else that's cheaper today than it was in 1980? I can't think of hardly anything. And silver might be the only thing. And when you look at the fact that there's a severe, and I mean a severe deficit in how much we mine and how much we recycle in a year compared to demand, and that shortfall, that yearly shortfall, it's only getting bigger. It's only getting bigger. And solar, if you believe solar is going to continue to grow, which I do, that's a big user of silver. If you believe EV vehicles and batteries, solid state batteries, they're big users of silver. You look at Tomahawk missiles and all the things that are getting launched over in the Ukraine. A lot of those. There's 500 ounces of silver in a Tomahawk missile. That thing crashes, that 500 ounces is gone forever. So you look at a lot of these industries that I think are going to continue to grow, and you're going to continue to see demand increase for silver. So I think that's a coiled spring ready to go. And relative to gold, they're found in the Earth's crust at about a 12 to 1 ratio. If you look at the last couple thousand years, they've averaged at about a 15 to 1 ratio. The ratio on the two of them right now is, I think it's like 80 to 1, something like that. In fact, I think it's north of 80 to 1. So that
Yeah,
means silver could 5x from here and it would be a normal where it should be relative to gold. So if you're bullish gold, you have to be uber bullish silver. And, you know, take all that with a grain of salt. I could be wrong.
good stuff. And where can people find you?
As always, I'm on Substack. I write under Bagholder. I haven't published anything in the last month, but I do have a couple articles coming out soon, and they can always find me there.
Great. Looking forward to it. Thanks so much. And let's try to do this this time next week. I think today's Thursday, so
Yeah,
that
sounds
works
good.
well.
I think next Thursday's Thanksgiving, but I'm available.
Oh,
I don't
no, no, no,
care.
no. I can't do Thanksgiving.
Okay, well,
But I could probably do like I don't know, Wednesday night or something.
yeah,
I
yeah,
don't go out.
whatever.
I don't
You
go
tell
out
me. My
and
my
party.
schedule's open, so we'll make it work.
Perfect.
As
Great.
always, enjoy your time, Colin.
Yep. You too. Thanks so much. Have a great night.
All right, buddy. Take care.